Hi, everyone. It's Will. I just wanted to come with you with part three of three different scenarios that I came up with and trying to see how efficient and effective this will be in terms of paying down this $50,000 HELOC. Okay, so just as a recap, the HELOC is 50,500. About 15,000 in additional items that were paid off is wrapped into it. One of the items that were paid off were the $35,701.46 mortgage. That mortgage was at 6%. I made 192 payments already, so I had 14 more years to go. So the three scenarios that I came up with and seeing, okay, how can I beat this $35,701 mortgage that was paid off, and I saved 50, I think 50 some $1,000s in interest, but I still got the $50,000 HELOC that has to be paid. All right, so let's get to the three scenarios. In scenario one, for the first few months of the HELOC, I was paying $438 in interest, and that was calculated from 10%. So when I got the next bill, it was $50,000, 500 plus the 438 in interest. I paid the interest only, and that left me every month with a balance of 50,500. So I can keep doing that for the next at least 10 years of just paying interest only. And then the next 20 years of the 30-year, I would have to pay the principal and interest. Now let's look at scenario two, where I'm still paying the interest, but I've added an additional $300 to see what would be the balance every month and going forward in scenario three. So with that in mind, start off the principal balance the next month with 50,500, adding $438 in interest. So then my balance was $50,938. As with the first scenario, the second scenario, I paid the interest only, and then that brought me down to 50,500. But then I threw in an extra $300 for the principal, and that ended my balance of 50,200 for that particular month. Now let's look at the third scenario. In the third scenario, I'm using the velocity banking method. And so I started off the balance with the other two at 50,000. I put in 3,390. That's my W-2 income for bi-weekly. And then $2,000 in investment. That gave me a balance of 45,110, because with those two sources of income going into the pot, it reduced the principal at some point throughout the month. So the 2,000 could have went in on the 10th, the 12th, the 13th, the 14th. My bi-weekly paycheck, they go in every 2 weeks, so that could have been a 12th of the month and the 20th of the month. But at some point, $5,390 total will go in to bring down the principal. Okay, so next, because I'm satisfying the payment, as velocity banking advocates point out, when you put your check in or putting the income in, as long as it's higher than the payment, you're satisfying the payment. So I can take that out from the $4,500 a month of expenses that I have every month, because I'm now satisfying the payment. So now my expenses are $4,062. And I got to add that back, because right now I'm not taking any draws from the month of the HELOC. I'm trying to save them to the very next month. And that's where I'm using a credit card. So I'm making all the charges on the credit card, and I'm using convenience checks from the credit card to get my other mortgages on there, and also to get my rent on there, and anything that a credit card can't charge, then I'm using convenience check. This particular credit card comes with a convenience check. And then the next month, once the interest and everything is calculated and it's been reported to the Bureau as a low balance, then I'll go in and pull the money out to make satisfy the charges, and it's going to go back up. But one of the principles of the velocity banking using the HELOC method is trying to keep the balance as low as you can. Some other velocity banking advocates indicated using a credit card or putting a credit card could help. So I started instituting that in. So trying not to make any deductions from the HELOC in any given month, put it all on the credit card through cash advance, convenience checks, and regular charges, and then come back that next month and pay it off, hopefully in full, so that I don't incur the charges. Now, I may incur the charges because some things can come up. Maybe I need to pay my insurance in full, which I generally try to do, and other things to bring down my costs in certain areas. But to wrap up and looking at the three scenarios and trying to see, okay, I've gotten this $50,000 loan. I used it to pay off one mortgage. So now I'm treating the line of credit like it's a first lien position. So the three scenarios that I've gone across, I can just do the status quo for the first 10 years of this HELOC and really never move the needle. All I'm doing is just paying just the interest, and then go to the principal and interest in the last 20 years. Or I can start with scenario 2, in which I am paying the interest, still 438 across all three, and then I'm adding a little bit of principal. So making kind of like an extra payment in general, because some critics of velocity banking indicate, well, you can just make extra payments and come out okay. All right, so that's what I did. Just made extra payments of $300 a month onto the HELOC in addition to the 438. So it's definitely coming down versus me using just the status quo. So now at the end, I've used the velocity banking, putting in my income, my investment income, anything that I come across as income is going into the HELOC. Then that is subtracted. But then I got to go back and put expenses minus the interest of the HELOC for the month. So my expenses were 4,500 minus the 438. So now I'm adding back 4,062 back onto the card, the HELOC, which would give me 49,172. Now with that, I'm also adding interest for the month. And adding interest for the month is going to go up still a little further. So now it's ended at $49,599 for the month. All right. Well, thank you very much for stopping by to see these three scenarios and me deciding, okay, which scenario am I going to use with this first lien HELOC situation I've created off of this 35,701 mortgage. Okay. Thank you very much. Please hit the like and subscribe button so I can move up maybe a little higher in the algorithm. If you know of anyone else that can benefit from looking at a HELOC, improving their credit, I love to work with them, me and my team. So you have my number and you have my email if you want to reduce your credit card debt, because I started with credit cards and eventually just moved on to a larger HELOC. We're going to definitely help you with that. Again, I'm a political economist. I am not a CPA. I'm not an attorney, nor am I a certified certified planner. All right. Thank you very much for stopping by. Have a great day.